Bitcoin up 31% trailing 1 year and 580% trailing 5 years. But what's next for the orange coin? Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today we look at Bitcoin at a $2 trillion market cap. Where is it going, and what is the driver behind the Bitcoin price? You guys know we love to focus on liquidity, especially our proprietary metric, TBL Liquidity. Today, my goal is to simplify TBL Liquidity unlike ever before. I'm going to bring up the balance sheet setup for us so that we can understand what is driving Bitcoin's price. We had an excellent question this morning from the TBL desk on the drivers of Bitcoin in the short term. For example, we had news last night out of Washington, D.C. that the Democrats in the Senate had come over and voted for a continuing resolution to fund the government and to open it back up. That caused a little pump in risk assets. Stocks and Bitcoin both had positive price action heading into the Sunday night trading session as Asia opened up on Monday morning. But what was the driver of those asset prices going up? Was it a liquidity flow because we teach flow, or was it speculation and front running? That question presents an excellent opportunity for us to describe, yes, last night's price action is a front-running phenomenon and not the actual flow of capital, but let's zoom in to that flow of capital to understand why a government shutdown ending just by itself is bullish for Bitcoin from the liquidity perspective. Secure your Bitcoin's future and your family's peace of mind. Too many heirs lose access to Bitcoin because there's no clear inheritance plan. Unchained is going to show you how to solve that. On Wednesday, November 19th at 11 a.m. Central, join Dhruv Bansal, the CEO of Unchained, Jeff Vandrew, their chief counsel, as well as the CEO of Gannett Trust, Joshua Preston. In an excellent online event, they will show you how to plan out your family's inheritance. In a free online event, join them for a live fireside chat on how to make your Bitcoin legacy secure and built to last. Never sell, just borrow with Arch Lending. Arch lets you borrow against your Bitcoin, unlock cash without selling, instantly access a Bitcoin-backed line of credit for as little as $5,000 for up to 2 years. There's no rehypothecation ever, and insured custody at Anchorage Digital. Stay long, stay liquid. Go to archlending.com/TBL and use code NIK, that's NIK, for 0.5% off of your interest rate. Now, the answer to the question, why did Bitcoin have a very positive price movement on Sunday night? Was it due to flow or was it due to front running? The answer to that question becomes pretty easy. It's front running because the flow hasn't actually happened yet. The Democrats joined the Republicans to reopen the government in the Senate, but it was just a procedural vote. That doesn't mean that any capital was actually deployed. The Treasury general account wasn't deployed. Money wasn't spent. That bill hasn't even passed both chambers of Congress here as of Monday, November 10th. The block height right now for Bitcoin at 923,048. So just because the Senate voted some way, it doesn't send physical flow through the market. So the answer to the question, is it front running or flow? It's front running. Now, what are the traders front running? They're front running the flow. And that's what we're going to try to explain today. TBL Liquidity simplified like never before. All right, I have a setup for us here. We have 4 balance sheets that we're going to try to understand how they interact at the same time. But in order to simplify TBL Liquidity and the effect that markets have on Bitcoin's price, let's start with the balance sheet of the Plebs here. So I have the Plebs And what we are going to do is we're going to give the plebs two different assets. We're going to give them Bitcoin, and we're going to give them traditional money. We're going to give them deposits. Now, from this perspective, we are going to assume that these plebs don't have any debt. They are earning income, and they're going to take that income and use the cash that they have, deposits, for their living expenses. Anything in excess of living expenses, that money can flow into Bitcoin. So that's the setup for us. Just two assets at the plebs balance sheet level: cash and Bitcoin. Cash is in the form of deposits. Now, where are the deposits here issued from a layered money perspective? The deposits that the plebs have, they are linked to the banking system because the banks issue deposits to people. So the connection between the banking system and you is the deposit line item. Now, let's go to the government shutdown and understand what happens when the government stops spending money and then starts to spend money again. The government has its money, its deposits held at the Fed. That is called the Treasury General Account. It's the cash of the government. TGA here is the Treasury General Account, assets of the government. This is cash. Where is it linked to the rest of the financial system? TGA is a liability of the Fed because the government banks at the Fed. So we will link TGA at the Fed to TGA at the government level. Now, what is the other type of money that the Fed issues to the financial system? It issues reserves. And that's where the relationship between the government, the Fed, the banks, and the plebs really starts to come into full vision here. So the Fed issues reserves to the banks, meaning the banks have reserves as their asset. So we put reserves right here. So now you see the reserves that the Fed issues to the banks are connected. Now, what appeared over here? Treasuries. That's what the Fed owns. Who issues treasuries? It's the US government. So where do treasuries come from? They end up here on the Fed's balance sheet. They also end up on the balance sheet of banks. They end up on the balance sheet of the private sector, but they come from the government. So treasuries that are issued by the government get bought by the Fed. So now you can see that these balance sheets are all interlocking. Now, let's go back to the government shutdown ending. What happens when the government stops being in shutdown and starts to spend money again? Now I'm going to show you how the flow of money when the government starts to reopen and starts to spend money, how that money ends up eventually in Bitcoin. That's the flow. Then we'll take it to the next level and show you how TBL liquidity functions. Now, here's a mention to this idea that liquidity can be measured or is measured by M2. M2 is only one part of this equation. M2 is basically here and here. It's just the liability side of banks. So TBL liquidity isn't M2. It's not looking at liabilities. It's looking at balance sheet strength and capacity. So I'll show you that in a second. But let's break down how the flow happens, how the money ends up into Bitcoin, for example. We're talking here about the US government opening back up. What happens to the TGA? The TGA is going to go down because the government is going to spend money. TGA goes down here. It also goes down here because the Fed is the government's banker. So when the government spends money, the Fed has to debit the TGA. And what does it credit? It credits reserves. So reserves now go up over here. So where else do they go up? They go up over here. If reserves go up, it means that deposits are also going up. Why? Because the government spends money. It sends it to whom? To the citizenry, to the citizenry's companies. Those are transfer payments. So the TGA goes down, reserves go up. Those reserves, as the bank's asset go up, they have to credit their customers who are receiving the payments from TGA going down. So then deposits go up. If deposits go up here at the banking level, where else do they go up? Now you see TGA here to here. Reserves go up. Reserves connected to deposits, and then the plebs get more deposits. Then how does that flow affect Bitcoin? It's only one more step. Deposits go down, and they buy Bitcoin. Remember here that the pleb isn't in debt, so this is all what on this side? It's not liabilities, it's just equity. And that's why the Bitcoin position is an asset to the pleb, because the pleb is doing it with equity. When the pleb gets deposits, when the government opens back up, that deposit doesn't get destroyed because the pleb has debt. It's going into the economy being spent, and then the excess is going into Bitcoin. So hopefully this helps you understand how when the government shuts down and then opens back up, it pulls money out and then puts money back into the system. This will hopefully also help to explain why repo rates have somewhat calmed down this week, because the idea that reserves will go back up when TGA goes down should help the money market. It should help funding, basically availability of funds. Now, let me show you TBL liquidity. We have treasuries here being issued by the government. We show the Fed buying, but the Fed only owns, and I say only, but they only own above 10%, around 10% of the outstanding debt of the US government. They're a major player, but they're not the only player. So where are a lot of those treasuries? Where do they exist? The plebs own some treasuries through money market funds, through mutual funds, total bond market funds, 60/40 accounts, 401ks, all of that. Yes, the treasuries are owned in part by the plebs, but the banks own a lot of treasuries. And that's very important for TBL liquidity. So we have the treasuries down here that are owned by banks, and they're issued by the government here. So TBL liquidity looks at the stability of the bank's asset base. We are looking at the stability of the asset side of the banking system. Why? Because if this side is stable, deposits can rise as banks lend money. So the stability of UST means interest rates not going up and volatility not spiking. That is supportive to the creation of more deposits, which, as you know, when deposits are put into the system and go onto the pleb's balance sheet, that's where Bitcoin buying firepower comes from. So TBL liquidity is about how much money can the banks create over here, because the money they create over here as their liability is the deposit, is the asset of the pleb. So this is my way of explaining to you. When the government opens back up, it's going to create flow through this balance sheet interconnectedness. But what we care about is not necessarily the flow here of how TGA ends up in Bitcoin. We actually care about the total size of the bank balance sheet, the asset side here. Yes, we care about the size of the Fed's balance sheet too, as the Fed expands and buys more treasuries, and they will start buying more treasury bills that will boost reserves. Reserves end up as deposits, and deposits end up in the Bitcoin asset class and stocks, of course. That's why these two are positively correlated. But it's not the TGA spend down that we care about as a research shop trying to build an asset-based liquidity metric. In the short term, we are all over the fact that TGA is affecting money markets and micro liquidity in the market. But it's credit creation that we care more about. So the strength of US Treasury collateral here is the influencer on the deposit base of the country. As the deposit base grows, that's more firepower to then go and buy assets. Thanks for sticking with us today at the Bitcoin Layer. We hope you learned from this balance sheet exercise, and we'll catch you guys next time.